Ashton with Keller Williams Realty, coming to you live every Wednesday to talk about real estate. This week I have Anton Stetner with me. He is the king of real estate and real estate investing.
I don't know about that.
So I'm super excited to have him with us to talk about market stats, specifically in Snohomish County.
This is crazy, to be honest.
And what that means for you guys as a buyer and as a seller, because it's mind-boggling how much the market has changed in the last 2, 3,
Absolutely.
even just 1 year.
And as we're going through this, we won't have time to necessarily answer your questions right now, but please type a question into the chat below. Ashton will come back through, answer them. If there's specific ones I need to jump in and help on, we'll answer them. But a lot of people have questions like, where is the market going?
Mm-hmm.
What's in store for 2022? Like, what's going to happen?
Yeah.
Or, hold on, let's go with our all-time favorite. It's gonna crash next year.
We're hearing that a lot, honestly. Everyone's super scared of another 2008
Absolutely.
and a big real estate crash. So I don't think we're going to see that. Anton?
Do we want to go over that right now?
I mean, real brief.
Okay, the real brief of it is, I think the good analogy is we keep thinking Tom Brady's not going to win another Super Bowl, and yet he does. Okay? And the reality is that last market crash, real specifically, was due to lending getting really, really loose,
Mm-hmm.
and then lots of new construction.
Yeah.
Lending right now is really, really tight. People have to have good credit, they have to have down payments, and they have to basically qualify. In the early 2000s, they didn't necessarily qualify.
Mm-hmm.
We also had a lot of new construction being built at that time. We don't have that same new construction, so in order for a market to have a major correction, there has to be supply.
Mm-hmm.
Right now, we don't have anywhere the supply can come from.
Yeah.
Therefore, prices have to keep going up. Even if demand goes away or goes down or lessens, there's not enough homes to keep up with population, both on the rental side and on the owner-occupied side.
And we see that right here in the number of homes for sale. It's gone down significantly just in the past year alone.
Yeah, so if you look at the number of homes for sale, and these are December numbers, right? We're
Yes.
comparing December of 2021 to 2020. When we look at this, you see that 518 homes were for sale in Snohomish County in December this year versus the 832 last year. So almost 300 homes difference,
Mm-hmm.
okay? Inventory right now is going down, and part of that going down inventory is we're not building enough new construction to keep up with demand. And then also interest rates are at historic lows, so that boosts demand and creates this because of the affordability.
Yeah.
Okay, what's next on your list?
So let's just go right in order.
Let's go down the list.
Okay, let's go down the list. So right now in Snohomish County alone, we're talking prices for right now versus December of 2020. The average home price right now is $722,000. That's like,
Wow!
holy. Going back to 2020, a year ago, December of 2020, the average home price was $596,000. So that's a 22.5% increase, or percentages don't work for me. I like saying a hard number. $126,000.
So,
That's crazy
so-
in 1 year.
so this is normal. This is way above average appreciation. This was pent-up demand. This was coming back into the market. People starting to feel secure as we figure out, COVID and things like that. And then also, this is people moving out to the suburbs, Snohomish County, okay, being a suburb, moving to the suburbs. It's the work from home movement, but this is not going to happen in 2022. So you're still probably going to see above average appreciation.
Yeah.
Okay. Like, let's say maybe.
Because supply is not necessarily going to correct itself.
Exactly. There's no supply. So we have no supply. So, and demand is still there. And so what's going to happen is we'll see above average. Above average is, normal is 4 to 5%. we could see another 5 to 12 again, okay, above average, but you're probably not going to see 125,000, okay?
Yeah.
And from our perspective today, you're definitely not going to see the crash, that cataclysmic event where real estate just falls off the market, because, oh, we did put it up here, there's 0.4 months worth of inventory. Okay, this is like trying to go to Costco right now and buy toilet paper during the early part of the pandemic. There's not enough houses to keep up with that demand, so even if inventory quadrupled,
Yeah.
10x'd, if it 10x'd, we'd only get to 4 months of supply, and that's still a good market. That's still a seller's market.
A balanced market where it's
Yeah.
a completely balanced market is 6 months.
Yep, correct.
6 months supply, which right now we're at less than half of that. It's beyond hot for a seller's market. Oh, it's getting chatty in here. All right, so we touched on this.
This
The
is what
number-
happens in real life and lives.
The number of homes for sale in Snohomish County is 518. So that's homes that are currently on the market anywhere, like all residential properties. So
Yep.
this is from your manufactured home to a condo to a 5-bedroom new construction. Last year, 823. So that's a pretty significant jump in the amount of homes that are available for the buyers. Shows to pending, we're also seeing a increase in the number of home showings.
Yep.
So that means there's more buyers coming into a home before an offer gets accepted.
Yeah, so another way to just say this is the average home had 24 showings and then the seller accepted an offer. We don't know how many offers they got, and based on these list to sales price ratio, we can instantly assume it was more than one,
Right.
because the list to sales price ratio was higher. So 24 showings resulted in the seller accepting an offer. It resulted in the seller accepting an offer at an average of 105.3%. So when you talk about this average of 105, it really means nothing. If the average sales price was 700,000, just to make the math simple, it means the average home then sells for 735,000 based on the list of sales price ratio. Now realize, if it's a really hot one, it may get bid up more. If it's not as hot, it may just pay the market price for it. Okay, and everywhere in between. So just be thinking though, on average, whatever that list price is, add in a minimum of 5% for you to be able to purchase it. Okay?
I mean, in December of 2020, it was still a hot seller's market.
We're,
There was no negotiations happening. They were getting full list price.
yes.
And it's just gotten way more.
Well, and the reason for that specifically is we have less inventory right now than we did last year. So there's less for buyers to choose from.
Right,
Less homes for sale.
right.
Okay, so that's causing this bidding war. And then heading into next year, as that market heats up, we would expect to see the spring market probably possibly heat up even further than this. So this is one of those things, like, don't wait. If you're an investor, don't wait. If you're a buyer, don't wait. Because 2022 is just gonna cost more.
Right. I bought my home in mid-summer of 2020.
Yep,
Summer is always a hot time.
yep.
Prices always
Yep.
go up in the summer. So I bought it in the height
Yep.
of 2020, and I have already gained over $100,000 in equity in my
It's
home.
crazy. Yeah,
So you can't wait.
yes,
It will just be more expensive
yeah,
if you wait until you're in a better place, or
Yeah.
you wait till, the right one pops up on the market. By the time the right one pops up, it'll be too expensive.
100%. One last thing in relation to the market, another just kind of macro way of looking at this is we have less homes for sale this year and prices are up, and we're in a hardcore hot seller's market in December. That's most likely going to continue through next year. Even as the Fed raises interest rates, this will cool down this appreciation. It'll cool down a little bit of the demand. But even that light cooling is still most likely not gonna move us out of a seller's market. We're still gonna be in probably a very strong seller's market for the next foreseeable few years.
So even once interest rates
Yes.
rise, and so the demand, the affordability
Yes.
drops a little
Yes.
bit, we're still not gonna see an increase in supply in order to make up for that,
Correct.
to correct the market.
Correct.
Definitely not enough to crash it, not even enough to correct it.
It appears from all the data that we won't even be able to get to a buyer's market.
Yeah,
Because like I said earlier, if we 10x'd our current supply, we would only get to
Still weren't
4
there.
months. That's a 10-fold increase, so a 20-fold would finally get us into a buyer's market. The start of one. Anyway, the market's hot, hot, hot. If you're thinking about selling, do it now. If you're thinking about buying, do it now. Because the market will cool down a little bit mid to late next year as they start to monkey with interest rates. And the federal government, they never quite monkey right. So it'll overcorrect for a little bit, it'll undercorrect for a little bit. It's just how the government works.
okay. Thank you so much, Anton, for your time.
Oh yeah.
And if you guys have any questions, please go ahead and comment below. I would love to be able to answer those for you. If you have something you want us to talk about next week, let me know. I am here every Wednesday to talk to you and answer your real estate questions. Thank you so much for joining us, Anton.
Yep. Happy
Have
to.
a wonderful week. Bye.
It's like the